Alright everyone, welcome back to a new video. I'm going to be speaking about how YM drives the futures market and how it gives clarity and direction. So let's get straight into it. This is a trade from the 14th of January. And right here what I have is an anchored volume profile on the monthly time frame. As you can see here, we broke above it, pulled back in. If you're using auction market theory, which is what this volume profile is once it pulls back inside after it's above volume area high and it pulls right back into the volume profile, which is this whole composite value right here. And it'll usually, what I like to do is I like to see a bounce off of POC, which is point of control here, because since this is a big high volume node, there's a lot of liquidity here for price to be controlled within the volume. But usually once it pulls back in from volume area high, it'll make a rotation to volume area low, which we have here. But not only that, while I was also still bearish coming into Wednesday, off this volume profile, we pulled back in, rotating into volume area low. Volume area low of the monthly volume profiles here, but on the higher time frame volume profile that I have pulled here, from all the way up here, we finally broke back inside of it. So now the next rotation that I'm looking to see a bounce from is either this low volume node that we have here. Usually low volume nodes can work two ways. It's either a way of support, which is how ICT likes to see it, as a fair value gap that we have here, and then we also have a breaker block. So we can probably anticipate for us to have a nice bounce within this area, but if not, we'll just pierce through low volume nodes, because this is just with low volume nodes, this is just orders that just need to be filled, and it's not as many orders compared to high volume nodes. It's very thin liquidity here, so there's not much going on here. Price will tend to pierce through it, because since there isn't many orders here to be filled to make price have a reaction, it'll just pierce through it. But it can also act as a support. So yeah, now let's break it down intraday. So what do we have here is we're just displacing, expanding lower. And then why YM is why you need to focus on YM when you're trading intraday, and why it will give you clarity is usually there's two ways that I like to see YM move. It's either forseen distribution or when both of the markets are decoupling. And usually the two assets that decouple each other is NQ and YM. So it can be YM expanding upwards and NQ decoupling down. Decoupling just means two assets are moving opposite directions. And then ES would usually be consolidating. So when the markets are decoupling, you need to pay attention to NQ and YM and see which asset is driving to a specific pivot level, which you could just view it as liquidity. If it's an internal high or external high or low, whatever it is, session high, whatever it is, it's usually one of the two is pushing upwards to try to take out the liquidity, so that then it's back in synchronization at 10 a.m. But what do we have here on YM is we have an SMT on the 4 hour here. All assets didn't have an SMT off the high. They were all correlated and expanding lower. But since we had 8:30 news, as you could see here, 8:30 news didn't manipulate. And that's important. 8:30 is usually a driver for news, and the fact that it didn't manipulate since that was CPI day. The next time frame for you to look for manipulation is 9:30 open, which is when the stock market's opening everything. That's when a lot of volatility gets injected into the market. So the fact that CPI didn't drive the move or do anything, you just wait patiently and just wait for 9:30 open. Don't take a trade before pre-market, because 9:30 is what's going to provide the direction. So as you can see here, we can play price. Boom. First thing we see here is 9:30 opens up, takes out Asia high, London high, and you can see that we have that manipulation here. And then what caused me to get in my trade within this session that I was trading New York Open is the fact that we had a DSSMT, which is just a daily SSMT. Is when um, Asia, within the quarterly theory concept, Asia's quarter one, London is quarter two, New York AM is quarter three, and New York PM is quarter four. But I usually don't trade New York PM too often. And we had a DSSMT, so that just means that we have a divergence between quarter two and quarter three, which is London and New York AM. And the fact that YM took out London high, ES didn't take it out, NQ didn't take it out, but YM did, that provided me clarity that the market wanted to continue lower, and then 930 manipulation happens. Because when we manipulate, we want to trade away from it usually. So, boom, YM manipulated. We got the 15-minute confirmation, and within that 15-minute confirmation, all I was looking for was just a fair value gap to get in or another form of cracking correlation. But what set me to just get in is the fact that we expanded. NQ obviously failed to continue up and manipulate, so I knew that the YM manipulation that we saw at 9:30 was the true manipulation. And as you could see this as a little internal sweep. So we were pushing up, price continued to go lower. We inverse this whole fair value gap. Then we had a one minute BPR here. So I just saw price consolidating here, and I knew a new phase of price was going to open up, and we were nearing towards the macro time and also getting near the new 10 a.m. candle. So once we closed below this 1 minute BPR, this 1 minute big breaker block formed. And the fact that we were also struggling to hold POC here, I just knew we were just ready to go for short. So I entered in. And then as you can see here, price just continued to drop lower. So I can explain to you my break-even process. So usually when I go break-even on trades, it's off of internal lows or highs, or if it's a specific fair value gap that I want us to fully just pierce through. And then I'll have confidence that I can go break even. I've just seen price move so much that I know specific points in price or structure to go break even. But the one thing that you guys should implement, in my personal opinion, with break evens, and that's helped me a lot, is when you're going break even off these internal lows and highs, wait for a candle body to close below it, not wicks. Because usually if it's wicks, price could tend to retrace, hit your entry or the specific PD array or whatever your entry model was, and then it'll tend to just break back down again. I feel like holding the candle, waiting for the candle body closure below the internal lows or highs or specific fair value gap has helped me a lot with not getting stopped out break even, because there's been many instances where I'd move break even and I didn't get the candle body closure. The candle just wicked. It stops me out break even, and then it just continues to hit the specific drawn liquidity that I had. But yeah, this trade was just a fixed 1 to 2 RR. That's what I'm trying to focus on this year. It's just to get my piece up high and not go for high RRs. Obviously, there'll be some days where I'll push for that, but just within the prop firm trading game, I'd rather just have a focus 1 to 2, and I'm working on building up my live account, and those would be the trades that I'll go for higher RR is my live accounts to compound them better and squeeze more out of my trades. But yeah, that's it for my trade. It's very basic. Sweep the internal, or took out the internal low, candle body closure, move break even, price retraced a bit, then continued down during 10 a.m. 10 a.m. was opening low before it retraced to continue lower. So yeah, that's it. That was the trade. That's how YM could help you with finding clarity and where price wants to push. Yeah, have a good one. Also, here's proof of the trade. 961. This is on an eval account that I'm working on with Tradeify. I have 3 select accounts, so I'm just working on building those up to pass them. I've been chilling off of Top Step. They've been having too many problems. I do have my funded accounts, but I'm just chilling off of them for a bit and working on Tradeify and playing around with Tradeivate a little bit more as well too, to just get the hang of it. But yeah, this is a trade. Have a good one, everyone.